Good morning, traders. Happy Friday. It's 8:03 a.m. Chicago time, 9:03 Eastern. Thanks for joining me again on a like Friday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off, completely risk off. The non-farm payrolls came out strong like bull. The non-farm payrolls came in at 201,000 versus expected 190,000. Unemployment, the net employment change is negative 51,000 versus plus 5K, and the unemployment rates is at 3.9 versus 3.8. We saw treasuries drop, and we also saw equities drop on the unemployment release. So very interesting. A little bit expensive, but here we are. So money is flowing into the U.S. dollar. The U.S. dollar is up 31 cents or 0.32%, and the British pound up 17 pips. The laggard today is the NASDAQ. Take a look at the Tesla chart. It's fugly in there. So big drag on the indices. I feel a sneeze coming on. Let's take a look at what's ahead. For the rest of the day, nothing. Seeing some Fed speakers. No, Fed Speaker Mester's speaking now. Fed Speaker Kaplan at 12:45 Eastern. Yeah, my allergies are working up. Very odd. It's like random. Probably the cat. Let's take a look at what we expected yesterday. Timing of these sneezes is just awful. Yesterday really was a bit of a surprise to me. We did not rally. We ended up playing out scenario 3, an attempt higher and a break lower. 1 second. Ooh. So none of these played out. Neither one of these played out at all. Yesterday was just really well set up for a reversal to continue higher after closing the gap zone. That would have been perfect, but the market doesn't operate on perfect. Here's what actually happened. Lots of rotations. All right. Lots of rotations, as you see here. Tons and tons of zigzags. Lots of opportunity, in my opinion, especially for small rotational moves. I mean, this is a scalper's paradise. It's respecting day levels. The impulse down from 28.93 to 28.80 was the first indication to me that I need to lay off the long side. So that came early. I did not see, I did not have an opportunity of a good setup or an entry, especially here. This would be normally a decent spot right here. An impulse pullback into the stock zone. The mid was not there. And so nothing happened there. So I really needed to wait for this to play out for a rotation, a continuation down, and I had talked in the Convergent chat room about 70 and a quarter being a low volume node from the 26th, I guess, and that was the first chance. Second chance right there again, and then I passed on this one, you know, 3 tries on that re-entry in the prior range, the test of the prior low. So there's that's that. What we have is a profile that's pretty elongated, pretty good range yesterday. 25 points, a very odd looking high, an okay taper on the low, not exactly an excess low, but okay. It looks like it shut off the selling down there eventually. Coming into the overnight session. Remember, I'm going through this so that we can put together the story of what the market is doing, the story of us and the market. Last night, the extended hours reopens. Quick drop. I saw this. I watched this happen in real time, and it just looked like news to me. Came all the way back, so back to the SOC. Higher low pushes the high. And then European markets open right there, right as we're pushing the highs. And then from there, it's really just selling. And then we get the non-farm payroll release, which has an SOC, or the scene of the crime, or the trigger spot of 2875. Again, was a little bit back on my heels on the non-farm payroll, shooting down on a better number. The number itself is not something that I'm too attached to, how far up or down, because it just depends on what the market expects. It's the fact that the 10 years dropped, and so did the S&P. And so interest rates, the interest rates are yields are getting squeezed higher. And so that's where we are currently. We're pushing lows. We keep pushing lows. I need to adjust my lows on my master levels. But overall, the profile overnight showed that we were fairly evenly balanced right here. And then we extended all that with the non-farm payroll, making this a double distribution profile. Good volume, 261,000 versus 110 mode. And a lower low to yesterday's low. We went to 2866 versus 2868 yesterday. So overall, the one-time framing continues lower. Look at that on the big picture. This is a trend line that I'd shown you guys yesterday, and it just continues. This channel lower continues with another lower high. Once we take out this high and end this one-time framing up, we're likely to see a quick pop up to 2,900. But that was yesterday's idea, and it just did not play out. We're opening right against the low. Right now, we're trading 2867.50 with a low of 2868 even. An overnight low before the number was 2868 and a quarter. So the overnight low before the non-farm payrolls was just a tick above the day lows, holding the prior day's range, and now we're below it. So you could see that in these profiles, one of the things that you observe about these profiles is the price range. Wow, look at these price ranges trading. The entire price range just trades, right? So it's very blocky, right? So there's a lot of activity throughout the range as we drop. So there's both sides are active. Volumes have been very strong, or relatively stronger. Yesterday's 1.38. The day before that, 1.31, 1.21 million, 1.07 million, and so on. Since the return of everyone from the holidays this week, volume has picked up, and hopefully it'll continue to be that way. What are we looking at for today? Let's adjust this. Boom. Boom. Kaplow. All right. So for today, given that we've had non-farm and we're trading right on the edge of the range, yesterday's range, the primary idea is responsive. So we're likely to continue with the lower lows and lower highs. Be happy if it didn't, just for a change. But overall, likely to open here at the lower end of the range. It's popping up a little bit now, likely to continue. And then I'm looking for it to test this overnight low. I'm looking for an impulse up, or at least a strong push up back into the 28.7450 point of control, and then a likely test higher into 28.85, and then consolidate into the close. Non-farm payrolls tend to be pretty quiet in the afternoon. So this is I am expecting this to trade. Now remember, every day we trade inside of the prior day's range. This has been a very orderly channel. Not expecting anything different here. The secondary scenario is more of the same. An open auction that gets responsive and then has an impulse down, consolidates near lows, and then starts to drift lower as we push into areas that go back to the middle of August. So overall, I'm just expecting it to hold steady and then pop up on the close like it's been doing pretty regularly. Those are the two key scenarios that I'm looking at today. If it continues to move out of the range, you have a higher probability of an open test drive, an open drive type opening. And the key thing here, I can invent stuff all I want, but the key thing here is if it does become responsive, how far, given the day ranges and everything else, how far do you think it'll go? Would you plan for the trade to go? How do you control the trade? A lot of people talk about entries, setups, and so on. They don't talk about exits. It's really, to me, a range from 28.6450, 28.85 is optimistic. But we've been getting pretty good range, somewhere in the 16 to 24 points or so. And so the plan here is to have some plan, any plan. I would rather you scribble some stuff on a chart that makes no sense to anybody else but to you, and to have that as your backdrop for when you execute and how you manage your trade, rather than doing this exercise and then going off and scalping or not having any plans at all. So just remember that any plan is a good plan, and don't do the Mike Tyson kind of comment where everybody has a plan until they get punched in the face type of thing. Don't forget your plan. Don't lose your plan as the market starts to rotate. It's important to keep track of what the narrative is. If you're ever going to put on size in this product, you need to stick with the narrative. One thing I forgot to do is to ask you to hit the like button. Please log into your YouTube account and hit the like button. Find it on the screen. Hit it. Helps me out. I appreciate you listening in this week. It's a short week. Good luck today, and I'll catch you on Monday morning. Take care.